Singapore's four-player telco market remains intact after the 1.4 billion Singapore dollar M1-SIMBA deal collapsed, sharpening questions over 5G investment returns. To unpack the implications for Singapore telcos, we have Hussaini Saifee of Maybank Securities. Welcome to the program, Hussaini. Glad you could join us. So let me begin with this. If consolidation remains difficult, can Singapore's four-player telco market fund the next wave of 5G, AI, and cyber infrastructure?
Thanks for having me. No, I think it will be a bit difficult or fair bit difficult for the telcos to fund the next wave of technology, or simply put, the high level of investments required for the downstream services. Given the hyper competition in the market, the ROIC of the telcos has gone down significantly. So it will be a bit difficult in my view.
But if, let's say, mergers remain off the table, what becomes the next path to scale for Singapore's telcos?
For the Singapore telcos, there are other avenues of growth, particularly for the likes of Singtel, because Singtel has associates, they have operations in Australia, they have big enterprise services business in Singapore, so they can continue to scale. StarHub, they have a very big consumer and the enterprise business as well, but not to the extent of Singtel in terms of their diversification. I think the dependence on consumers, especially for SIMBA, the dependence on consumers is high. But the likes of Singtel and Star, Singtel has a high level of diversification and Star to an extent because of their enterprise services.
But looking ahead, Hussaini, would you say that Singapore could eventually prioritize infrastructure resilience over low-cost mobile pricing?
I think that should be the approach going forward, in my view. Simply put, because the prices of telco services has come down so much, so significantly, right? So if you can get a monthly plan for $8 to $10, which is as good as the cost of one-time meal, right? So that kind of underscores the level of price decline which has happened in Singapore. And if that continues, then telcos, ROIC, and margins will remain under pressure, which in turn could impact their ability to invest. So for telcos to invest and for in terms of network resiliency, in terms of cyber security, in terms of the next generation of technology, they have to recoup their investments, which in my view could come in the form of better pricing or a more rational competition.
How about on the side of price? Will price competition slow investment in 5G, AI, and cyber resilience?
Yes, so that is the case. That if the competition remains high, then telcos' ability to invest as their free cash flow goes down. That the level of competition in Singapore is hyper in the sense that the decline in revenues, mobile revenues, are as high as high single digit to low double digit. So, in my view, I don't think that this level of competition is sustainable. Then it will hamper telcos' ability to invest.
But looking at where we are right now, are telcos already shifting capital away from consumer pricing wars toward AI and enterprise infrastructure?
To an extent, yes. In the sense that both Singtel and StarHub, to an extent, have prioritized their enterprise services because that's where they see bit more growth, whereas the consumer remains challenging. So yes, they are focusing fair bit more on the enterprise services. And as far as Singtel goes, and Singtel is a very big group, and they have a much bigger balance sheet. So their focus on investments on AI and data centers is much bigger. There is investing because they have the balance sheet. But in general, I can say that consumer is weak. That's why a bit of priority is going to other businesses like enterprise.
But is this doable? Could enterprises eventually absorb more infrastructure costs as AI demand accelerates?
Can they absorb more costs? In my view, Singtel, yes, Singtel is the balance sheet, simply put. Okay. So Singtel can do that. Startup also has the balance sheet strength. So I will put it that way.
So overall, for Singapore specifically, do you think it needs a new telco model if consolidation remains difficult?
See, it is very driven by consolidation. And, based on my experience of covering telcos regionally, what we have seen is that consolidation is followed by better pricing and more rational competition. So as far as uh, means, I don't see a model, and it is difficult for me to foresee a model where the market remains a four-player market and still we see competition to improve.
But Hussaini, in place of full telecom consolidation, would you say that infrastructure sharing can become Singapore's alternative to it?
Infrastructure sharing is already going on. There is no question about it. So what happens is that Startup and M1, they have jointly roll out a 5G network, at least on the access side. They also share a fair bit of physical infrastructure in terms of uh, fiber and some of the in-building solutions and things like that. I don't think that network sharing alone can offset the need for consolidation and help to improve the margins or ROIC of the telcos.
And since we've already touched a bit on AI, Hussaini, is Singapore moving toward a telecom model built around AI infrastructure rather than connectivity?
No, I won't say that. I won't categorize it that way. Simply put, means Singtel is focusing fair bit more on the data center and AI side, but it is irrespective of what is happening on the telco side, on the consumer telco side. Okay, so it is not connected to that. And I don't think that means investments into network is anyway related to AI. Means it's not that AI can offset the investments in network infrastructure. Network infrastructure is required irrespective of what happens on the AI side.
Lastly, before we say goodbye, Hussaini, is there anything that we should be aware of? Are there risks that may emerge if only a few operators can afford large-scale AI and cyber infrastructure investment?
No, I don't think so. I mean, cyber investments is required. Okay, and it is needed to an extent is also because of the from the regulation side as well. So that investments is required, but not to an extent the kind of AI investments which we see which the likes of Sintel is doing. So I would categorize that investments into cyber, network resiliency, and future proofing the network for the next wave of technologies like say 6G is the level of investments required, and that the telcos which can invest in that on the back of their balance sheet or cash flows, I think those telcos can benefit.
Thank you so much for sharing your thoughts, Hussaini.
Thanks for having me.
Once again, that was Hussaini Saifee, head of ASEAN TMT Equity Research Analyst at Maybank Securities. For more news, visit sbr.com.sg.